What's up YouTube? In this video, I'm going to analyze the stock of Advanced Micro Devices or AMD and try and figure out whether it's a good value right now. If you're new to the channel, my name is Dan. I do a lot of stock analyses and investment stuff on this channel. So if you like that kind of thing, hit the subscribe button to see more videos like this one. Alright, let's jump into it. So AMD has two main lines of business. The larger line of business is computer chips, processors. You might be familiar with the AMD Ryzen series, the competitor for Intel there. But they also have the graphics card business with the Radeon series of graphics cards. So here is AMD's revenue by segment. They take their graphics cards and their processors and they kind of lump them into the same category, computing and graphics. That accounts for about 70% of their revenues. The remaining 30% goes into this category called Enterprise, Embedded, and Semi-Custom. This category includes things like server and embedded processors, system-on-chip products, development services, and even technology for game consoles. Here's AMD's revenue by geographic region. So actually, the sales to China, including Hong Kong, account for a slightly larger portion than sales in the US, and they have a healthy portion of the revenue coming from Japan, Taiwan, Singapore, so huge Asia presence there for AMD, and they even have some sales in Europe. So one thing I like to see here is a very diversified, portfolio geographically, which, guards against fluctuations in currencies. When we have some of these governments printing large amounts of money, I always like to see this. So here I'm looking at AMD's balance sheet. They have a liabilities to assets ratio of close to 45%, which is pretty healthy there. Not too much to worry about. The current ratio, which is current assets divided by current liabilities, is 2.28. So they can easily cover their debts that are coming due soon with the current assets they have. The quick ratio, 1.74, again. That is pretty healthy there, so there's no real liquidity concern here. And when you look at that interest coverage ratio of over 20, that gives you some comfort there for their solvency. They can pay their interest expense over 20 times with the income they bring in. They have a good bit of cash on their balance sheet at 25%, and very interestingly, only about 21.7% of their assets are long-term assets. So they don't have heavy investments in operating assets, which I like to see. Alright, so what we're looking at here is a DuPont analysis for AMD. A DuPont analysis is where I look at the return on equity, very important measure of profitability from a stockholder's perspective, and just break it down into its three parts. You can see I made a video on it if you're curious in the description below. For AMD, it's interesting here. We don't really have a long operating history. If I go back to the years before this, AMD was losing money. So it's hard to say what their long-term ROE is going to be, but I am quite encouraged that they hit 31% in the most recent year. And that return on equity was not driven by a bunch of debt. You can see their equity multiplier there of just 2.13. It was really driven by an increasing net income margin, which jumped from about 5.1 to 10.2. So pretty insane there. It doubled. This is a very encouraging sign. That means for every dollar of sales they had, they ultimately kept 10.2 cents of profit. That's what the 10.2% means. The asset turnover is also impressive. It has gone down. I don't like to see that, but it's still pretty good there at 1.43, meaning for every dollar of assets they had in place, they generated $1.43 in sales revenue. Now, if you look at a company like Intel, their net income margin is roughly 30%. So I am very encouraged to see the increasing margins for AMD, and I'm very happy to know that they can reach a level like 30% in the coming years. So here I'm looking at revenue growth for AMD over time. They actually were doing better in the early part of last decade, then they kind of started to sink down there, but they are definitely on the comeback, as you can see here, increasing revenue every year and pretty substantially between 2019 and 2020. Okay, so at this point, I would like to estimate an intrinsic value for AMD stock. Given their relatively short operating history of posting profits, this is going to be challenging. We don't have a stable net income margin that we know they're going to make going forward. We're going to have to assume that their margins are going to approach the industry average over time. Furthermore, we have to assume some sort of growth rate in their revenues. So I'm going to be relying on analyst forecasts for the next couple of years, and I'm going to make my best guess on how much they're going to grow thereafter. So for a company like AMD, this is definitely a tricky process with a lot of estimation error, but let's have a look at the spreadsheet and see how a potential path to dominance in this industry could look like for AMD. Okay, so here's my forecast for AMD. You've got your base year here, you know your revenues, you know your net income, you know how much the company reinvested. What we have to do then is assume some kind of revenue growth in the coming years. Now, for the first 2 years, I have forecast available. You have a ton of financial analysts following the company. So if I use the consensus forecast, that gives me the predicted revenues for the next couple of years. After that, it becomes a little guesswork. You have to generally assume that the growth in revenues is going to be declining. We can't really say how quickly though, but I'm still assuming a pretty generous growth rate of 30%, then dropping to 20% per year. And so after 10 years, we would end up with revenues of about $84 billion. That's about where Intel is at right now. I'm also going to assume that their net income margin approaches to what Intel's is. So you can see the path there to make that happen. Now to get there, we're going to have to take some of that net income. We're going to have to reinvest it back into the company. That's where the reinvestment rate comes in. Now the reinvestment rate is going to be pretty high initially, and of course it will go down as the company matures. If we assume all this is true, that gives us a stream of free cash flows to equity holders for the next 10 years, so we can calculate the intrinsic value of the company. Okay, so if we plug everything in, we got these free cash flows to equity, discount them back to present value. I'm using about a 7.6% discount rate for AMD, reflecting the fact that they have a pretty good balance sheet, but also that their industry is pretty competitive. If I do that, I discount these back, I get the total firm value consisting of about $1.7 billion in cash. The present value of those cash flows over the next 10 years is about $32 billion, and the remainder is the terminal value. The terminal value is calculated as the free cash flows in the terminal year after the 10th year, divided by the discount rate minus that growth rate, and we discount that all back. So in these calculations, AMD would be worth about $170 billion or $141.93 per share. Okay, so is AMD a great deal? Well, let's revisit this chart here which shows their path to profitability. I think it could be a good deal if things work out very well. I mean, look at this incredible streak of revenue growth. Look at this increasing net income margin. We're saying they're going to have the revenue Intel has in just 10 years. So this valuation is subject to these estimates. Let's just tone things down a bit here. Let's say growth drops to 25%, and then 20, and then after that maybe it hits 15. And let's say the net income margin increases, but then after that, let's just say we top out at 28%, which is still a good margin. If we assume this, let's see what the value becomes. Okay guys, so using these slightly more pessimistic growth rates and net income margin growth, we're going to have an intrinsic value of about $97.53 per share, which is very close to what the stock is trading at right now. One last piece of information that can be helpful is to look at insider trading activity for AMD. And what we can see here is that in the past year, in the past 3 months, you don't see any insiders buying AMD stock. You do see quite a few sales transactions. When I look at the number of shares, it is pretty significant. In the past 12 months, you've got about 3.3 million shares sold, about 600,000 sold in the past 3 months. So all else equal, this is a pretty negative indicator about their near-term future when you see the insiders dumping the stock like this. Alright guys, so here are my final thoughts on AMD. For me, it's a pass. I like their balance sheet. They're in a lot better financial shape than I had thought before I looked at it. So that's definitely a plus. However, the valuation right now of over $100 billion for this company is just too prohibitive. There's not enough room to run. There's not enough upside. You know, when I had my vision for how the company could do, you got to understand that's a fairly optimistic vision there, where, you know, they grow their revenues to essentially be the same as Intel's 10 years from now. They're going to take over. Well, you know, I think it's possible they will take over, but it's not for sure, guys. Intel's the top dog right now, and someone has to take it from them. And, you know, they're going to do everything they can to fight that off. Plus, you got NVIDIA with the graphics cards there. So it's a very competitive industry, and to just snap your fingers and just say, okay, AMD is going to take over, I mean, they could, but, you know, it's not for sure. And so the stock really only makes sense if they take over. And, you know, since I can't guarantee that, for me, you know, there's not enough upside there. I'm going to pass on it, but that's just my opinion. If you guys are more familiar with their graphics cards or their chips and you have some thoughts about that, please let me know in the comments below. I'm not that computer savvy, so, you know, I'd appreciate some feedback on that. Hit that like button if you like the video. Thank you for watching.